Hey, Brian, by the end of this year, the U.S. and China must certify that both sides are complying with the deal. And the amount of Chinese purchases from American farmers is one reason why it could be economically and politically painful to exit the deal. Under the terms, Beijing pledged to buy $41 billion in agricultural goods in 2020 and $48 billion in 2021. Last year's numbers fell short during the pandemic, but this year's ag exports to China are on track to come close to reaching the goal, according to USDA figures. Now, in the last year, American ag exports to China are up 38% due to both higher demand and higher prices, although there is some disagreement between experts about how much credit the deal gets for those increases. Xiaoping Zhang at the U.S. Soybean Export Council says, yes, that walking out of the shadow of the trade frictions, U.S. soybeans return to the market in a big way. Currently, the U.S. is dominating the soy imports into China, he tells me. Pat Westoff at the University of Missouri says weather and African swine fever are also part of the equation, but notes China has bumped up its meat and livestock purchases thanks to new market access there as part of the deal. But Brian, one thing is certain. In post-trade war times, American farmers have seen their biggest customer base restored after 2 years of uncertainty.